folks, I'm excited to tell you about my new sponsor, Black Bull Markets. They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500-to-1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
Good morning, everyone.
Good morning.
You guys are doing well. We are back. Finally, after a couple weeks off. Excited to be back with you guys today. So we have a couple of announcements that we want to go over with you first. First and foremost, we're going to be talking about this throughout the stream. But I decided to kind of start off with a couple of things that we have just come out with, which is we're so excited for. So for most of you who have been on last week's webinar that we held last Saturday, we held a prop firm automation webinar in which we are starting this service where we will pass your prop firm challenge or your money back. But the best part is that not only will, if we fail, we will not only refund your service fee, but also give you the challenge fee back too. So essentially, if you do not get funded, you do not pay a dime. So we are starting with this just because a really big problem within this industry is that so many people try to get funded so quickly, but they're really not ready for it. And because it's really just that instant gratification type of feel, people really want to just jump right into the live markets with a ton of money and just start making, a lot of cash really quickly. And it's just not the right mindset to have. And a lot of traders do this and they end up failing and losing the challenge fee as a result, spending thousands to even $10,000s of dollars doing this. So I always say, if you're not already profitable, you're probably not going to be profitable when taking a challenge. So what we have decided to do to kind of combat that is to provide an easy way for you guys to get funded. So you guys can sit back, let us do the hard work for you, get your funded account, and then even utilize our trade ideas, or you can call them signals, within your funded account so that you can not only maintain it and grow it, but also really, pass the challenge and grow it and scale it for, long-term future passive income. So that is, definitely something that we have been looking into for quite some time, and we are so excited to be releasing that today. We actually, we're on last Saturday, so we're actually going to be holding another webinar about it this Saturday at 3 p.m. Eastern time. So if you guys missed out on last Saturday's webinar and want to join in this upcoming weekend, feel free to do so. I'm going to be dropping a link here shortly for that.
Yeah, so the idea is to not only, get you funded, but help you maintain a funded account, right? And we know a lot of people who obviously will even pass a challenge themselves, but it can be very difficult to be profitable for multiple months in a row for especially people who are relatively new or inexperienced. So the packages that we've put together, they're really designed to not only pass the challenge for you, but help you actually extrapolate consistent cash flow from the markets from this prop firm month in and month out, right? That's the end goal for all of us, right? Is that financial freedom component. So I'm super excited to bring this to you all.
Yeah, definitely. So what I'll do here, guys, if you want to see more information about this before we get into the charts, I'm going to send you the link to our Discord channel if you're not already in it, just so you can have it and you can check out all the different options there is in regards to the service. So let me just find the link to that Telegram really quick, or excuse me, the Discord.
Another major announcement, guys, the crash course is now live that Nate and I have we've literally put, I don't know how many hours, Nate, just tons and tons of hours, late nights planning and outlining everything to go into this course. And it's the crash course and it's putting everything together, right? Most courses will teach the terminology, right? The concepts of what is a sponsor candle, what is an imbalance, right? But it's not necessarily empowering you to put all of these concepts together, right, into a systematic approach, right, and really helping you understand the underlying logic behind the concepts so that you can actually apply them. So this course is rooted in application of the concepts. Um, it is live on our website. We launched it last week. The feedback we're getting already is really, really good. Lots of value in there, and people are seeing kind of an immediate effect, and almost an eye-opening experience with it. So if you are interested in it, it is something that we don't require you to be a part of our private mentorship to be able to access this course. Now it is required for this course that you do have some significant background and understanding of smart money concepts to begin with, just because it is advanced, right? And it's not, the course really isn't about what is a sponsor candle or what is an inefficiency or what is liquidity, right? That's all, kind of prerequisite information that you should already know coming into this. This is advanced stuff, and it's how to actually take all of it, put it all together, build an approach for yourself, which will allow you to, be a self-sufficient, consistent trader. So, if you're interested, also just feel free to book a call with either Nate or me, and we'll be happy to discuss it. But super excited to bring that to you all as well.
Yep. For all you who are currently in our all-inclusive membership, you already will have that in your account in our on our website. So you should have that for free. We don't, upsell any of that stuff. That's all part of the package. That's, the definition of all-inclusive, meaning everything. So you shouldn't have to, wait and pay for new things as it comes out. Those will be given to you for free. So you should be able to see that within your account on our website. So if you don't already see that, send me a message. I'll be happy to get that fixed for you, because I know we're experiencing some issues with that. But in terms of the fees for the prop firm automation service, that just, you guys can check that out on our Discord channel. I posted that here. I'm not sure if it actually sent. And if you are really interested, just send me a message and I can send you the Discord link if you guys don't see it for some reason. So yeah, very excited about that. It's something that, I think we're really one of a kind in terms of starting. Now, there are other services out there that, can pass your prop firm challenge or your money back. There are some other services out there that do that. However, the problem with that is that those people do not understand how, first and foremost, how real trading works. They're just using, bots to do so. And so are we. However, they're not really caring about your success when you get funded, or even if you get funded with the prop firm, because some of the prop firms that they use, they're just looking for ways in which, okay, do my bots or do my, whatever they're using to pass the challenge, is it going to be good for this prop firm? Will it pass? If it does, great. They, add it as a service. But the problem with that is, for a lot, especially for a lot of prop firms out there, they're not very credible at it whatsoever. So sure, you could join this, this service, obviously not with us, with another group, and pass a prop firm challenge, but then never receive your funded account. You'll never receive a payout, or you'll be flagged for some BS reason, unbeknownst to you, whatever. So really what makes a good service like this is not only providing you guys with a very credible prop firm that has deep liquidity to ensure you get paid out, that has a good reputation, that has good morals and beliefs behind what they're doing, but also providing you not only with the service feedback if we fail, but also the challenge fee, guys. We're going to be covering the entire amount. So if you fail, we're going to cover the entire challenge fee as well. So we are kind of like the first, in the industry to do that, but at the same time, not leaving you out in the street after you pass the challenge. Same thing goes with, mentorship and all that stuff. So many people sell you a course and then leave you out to dry, right? Because they just want to make money off of you. What really makes a good mentorship is not only having the right information through courses, but getting the right mentorship and guidance and having that reinforcement through what you've learned in that course material to grow the skill, because it's not going to be something that you immediately learn and can be profitable with. It's going to require failure. But having someone there who's already been through that failure and who's already done it, that is someone who you need to see that continuous education and reinforcement with. So we back that up the same way we do our mentorship, but within our prop firm automation service, is we not only help you pass the challenge or your money back, the full amount, but we also provide you continuous education and signals to help you grow and scale that funded account the right way. So like I said before, if it's something you're interested in, just send me a message. I'd be happy to talk to you more about it. You can even book a call with us if you have any more questions. But it is, if you do not get funded, you do not pay a dime anywhere. All right, we will get started here, guys. We're very excited to be back. We haven't been on a live stream in over 4 weeks now, so we're going to get right into the charts here.
Where's everybody from? Drop in the chart.
Drop your location. Drop your location. We'll start here in about a minute. I'm just going to pull up all my charts here, and then we'll go ahead and get started. But drop your location here. Yep. We'd love to see where you guys are from.
I'm currently traveling. I'm in South Carolina. Not my usual spot. We got Rwanda. Simeon, what's going on, bro? Got India in the house. Philippines, Manila. Nice. Italy.
All right. Good deal, guys. Well, we'll go ahead and get started here. I'm going to share my screen. Obviously, I cannot see the chat as I go through, so just try to save your questions for the end when I stop sharing, and then we'll go ahead and get started. All right, are we good? Can we see this? Can we hear everything?
Yep, I got you.
Everything's good. Everything's in large screen there. Okay, cool. If you guys are having a trouble hearing me or seeing the screen, just send me a message on Telegram because I can't see the chat, or Aiden can monitor the chat and we can fix the problem. So, all right. So within AUD CAD, we're going to go through a multitude of different pairs. I'm going to leave some of the majors for Aiden to go over because that's mainly what he trades. I trade the exotics and the crosses mainly. So first, start off by talking about AUD CAD. So doing a quick top-down analysis, we have the understanding that we are overall bearish in the market. Okay. If we said that we had to determine whether price is bullish or bearish or we're going to die, well, I mean, it's quite obvious. It's bearish. No need to complicate anything. Okay. So we can actually see that just based upon basic supply and demand, while we're making lower lows and lower highs, right? Price has swept liquidity. We've made a lower low. We've come back up into the last buying volume here, pulled back, mitigated that supply, made a lower low again. This is the last buying volume here. I mean, it's very simple stuff, right? We do not need to complicate it. Complication does not mean it's better. Simplicity really means it's better, right? So many people think, oh, the more complicated something looks or the way it sounds, it's probably better information. No, it's not. If you try to complicate your life, it's not going to be fun for you. So this is an area of supply higher time frame. This would be considered more of a liquidity run for continuations, right? For lower low. However, we came into a higher time frame level of demand. Now, I'm not going to go through the full top-down analysis, but we did come into a higher time frame level of demand. So at this current time, we were extremely bullish. We did run this previous high. We did come up into this level of supply, and we did see a reaction. So even though, when we come into higher time frame levels, right, let's just say we're overall bullish, even though we're not, we would make, a higher high, a higher low. What would we naturally expect? A higher high, right? So even though that is the case when we come into a prior level of demand, we would naturally expect a higher high in continuations, right? But the fact that we swept liquidity and we came into this level of supply higher time frame, this is what caused us to have the reaction. And now I'm not saying that we're just going to go short and make a lower low. I'm just saying that since we had the reaction, we failed to generate a higher high within this bullish counter trend, and we have broken structure back to the downside and we're starting to trend down. This is telling me that, well, if we are to go long, where could price come into before doing so? Because we're looking for shorts anyways. Higher time frame, we're bearish. Lower time frame, we're bearish. We're following the market structure. So if price is going to go against our overall directional bias, where would price come into to do so? So in this case, what you would look for is just the previous low, right? The previous swing low that failed to generate the lower low. That's really all it comes down to. Not saying that you're going to buy it. We're not buying it from here, well, potentially because we came into a higher time frame level, but just disregard that for the time being, right? If we were overall, bullish in the market, if we're looking to sell counter trend, let's just say, where could price come into before continuing long? And it would be right here. This is the last selling volume in the market that failed to generate the lower low. Just look at the basic counter trend structure. This is why a lot of people in our group do so well, because they keep it so stinking stupid or simple. The acronym KISS, right? Keep it simple, stupid. That's really what we need to do. And that's really all it comes down to. Where do we place our take profits? Just at the general levels. You don't have to find precise price points to the exact pip down to the 1 minute time frame with your entries and your stop losses and your take profits in order to be profitable. You can have general areas just based upon market, basic understanding of supply and demand and market structure. So now that we know that we've swept liquidity into a level of supply and we're starting to trend lower, we should continue to move short until we at least reach this level, 88345. Now, we will be looking for longs in this level because we did accumulate in a higher time frame level of demand, but we'll save that for another day because we're nowhere near that level. So let's scale into a lower time frame. And what we'll notice is that price initially in here, we made a low. So naturally we would expect to make a higher high because we're still counter trend bullish during this counter trend, right? We failed though. We failed to generate the higher high and instead rolled over and made the lower low. So where do we look? Well, we look for our last buying volume, essentially right in here. That's that last swing point, but also intermediate last buying volume in here, right? We have the imbalance that was created. So those were our two levels of interest. We came into the first one and we had the reaction short. So we never got the second entry, and that's okay. You can still leave it, just because what this could have been was, an overall expansion, overall pullback, overall expansion, right? So that's what we could have seen. So I'm still keeping this open for the time being. Obviously, if we come into our higher time frame level first, I'm no longer looking to sell anymore, right? So we've come up into that level, and the same sort of deal applies. We made a lower low, so what do we look for? The counter trend, the last buying volume. High, low, high, low, high, low, failed, lower low. Comes into supply, lower low again. It's very, very simple. Now, it does take practice in order to understand it, and it does take the right setup for it to actually work out, right? You can't just go to a random pair and a random time frame, just look at just the basic trend and where the last buying or selling volume is and just place a trade. You have to have a holistic understanding of the market. But if you do and understand how to do top-down analysis, this stuff can be relatively easy. And, we're not looking to scalp. We're not looking to get in and out very quickly, because that creates more losses than wins, because you have to be more precise when scalping, your positions. If we're just getting it off of general areas of interest in the market, right, just like right in here, we don't have to worry about all the noise when we come up into it, right? Because there could be like a 1 minute break of structure. You look to pull back, but price ends up continuing, hits your stop loss, and then finally goes in the right direction. Now you got stopped out, but then the market continued to go where it was always meant to go in the first place. But I did not get stopped out because I was patient enough and just traded the overall level of interest. Now, I'm not saying scalping is bad. I'm just saying that you have to be careful when you're lower time frame trading, because you have to have more higher time frame confluence for your more precise lower time frame entries. So that's why I like to just trade intraday, intra-week levels, and then scale into those levels upon reactions from them. So once we get a reaction, then we look to scale it. So this is exactly what we did here. So I know I'm taking some time to go through this pair, but I'm just going to do, kind of a full top down on this. And then everything else that I go over today will kind of just be, relative directional bias and everything. I just wanted to make sure you guys understood kind of the general way we look at the market in terms of a relative, top down approach. So that was our level of supply. So we came up into that, had the reaction. I think this was some sort of news event. Even if you decided, this was a breakup structure, which it wasn't. We never closed below it. And if you waited for the pullback to short off and put your stops above the high, it would have worked out for you, but that's not something I would have done, just because I would need more confirmation here. Really what you want, instead of an initial reaction, because what is an initial reaction from a level? It's probably just profit taking, right? Right. People who are getting out of their buys, naturally price starts to sell off, right? So this move could be fake, right? It may not be real, even though it's a reaction from the level. So we have to be very careful. What makes for a higher probable entry is not Well, first and foremost, it's breaking structure. And obviously this is not a break of structure. Remember, breaking structure, you have to close below it, and not just one little stupid candle closure, because it could just be a sell to buy, right, for continuations. We have to see a sustained closure. I almost say it like a common sense break of structure. I mean, we just have to use our brain here, guys. We all have brains. We all can use them, right? This is a common sense break of structure. Even this is a common sense break of structure. Is this a common sense break of structure? No, right? I mean, just look at the chart and kind of just use your intuition with it as well. So what makes for a more highly probable trade is not just the initial reaction in break of structure for pullbacks to sell off, but it's that failure to generate the higher high after seeing the reaction and then the lower low and then pulling back. That will be your entry. That will be the highest probable entry right there. So that's exactly what happened, right? We had the reaction, we failed to generate the higher high, and we made a lower low in the market, creating, if I just go out to like the 30-minute, maybe you can see it better, creating that sort of last buying volume in here, this area of supply that failed to generate the higher high, having reacted from the supply level and making a lower low in the market. We have our overall pullback, and this is just really just generating liquidity before the move. So in this sense, we create equal highs and equal lows. So when traders look to trade this breakout here, because we're trading above this resistance level, they look to go long, right? But then we know retail loses and then price goes short because it's overall bearish. And we can look to attack sell side liquidity next because that's what it takes, or that's what it created. And that's what we're going to look to take it. So that's exactly where we came into, this level of supply. And we had our lower low. So we're just following structure all the way down. So let's go to the hourly. Right. So there were multiple levels within this range here, because just look at the basic structure, right? This is the high that generated this overall lower low. So where's the trading range? It's right here, right? We don't look to trade off of anything else in here or in here or in here anymore if price goes like that. Why? Because this is the trading range and the trading range only. If we come up past that, you know, sure, it could be a buy to sell for continuations back within the range, right? It could be, but most likely it could just be a break of structure, right? And then price will look to go higher and then may have the overall pullback back up into that level. Now, very quickly, here's a quick, learning experience for you. Just because, what would you do if price went like this? What would you do if price went like that? And then price went like this? Would you look for an overall pullback to buy it? If the answer is yes, unfortunately, you would be wrong. Because you have to look at the higher time frame when understanding the difference between actual breaks of structure and overall pullbacks for continuations. This is what kills traders and just blows their account because they don't understand this simple concept, right? And I say simple, guys, because it really truly is simple. To just look at how the market structure is forming. If we are overall bearish, if we have come into a higher time frame level and we have a higher time frame objective down here, that tells you the probability that price will come into this level before potentially going long and making a higher high is quite high, right? So having that understanding, doing your top-down analysis, you will know that we are going to be bearish, especially because we failed to generate a higher high, made a lower low. We're in a pullback now. We're in this pullback phase. So what do pullback phases look like? It's not always just, ponies and rainbows and beautiful swings like this. Sometimes you go like that, but we cannot be so enticed to look for pullbacks to long. Why? Because we're overall bearish. We haven't come into objective yet. So this, in my eyes, would be an overall retracement for continuations. Lower low, lower high, lower low. That's what it should look like. So in this case, the answer to that question is if price came higher than this level upon a pullback, we would still look to trade in this region of price. If we were overall bullish in the market, then yes, any sort of break of structure counter trend would be good for continuations, because at that point, if you're making higher highs and higher lows and you break the counter trend here, then you're going to continue with the overall trend to make an expansion, pullback, expansionary move. That's what you would look for. So that's how you can kind of distinguish the difference generally between a actual break of structure and just an overall pullback. So, but in this case, this is still the trading range. Where's our last buying volume? Well, we have sort of, this is the level in which structure was broken, which is this previous low was, we're taken care of. That was our last buying volume here. We can see a lot of imbalance sort of forming. We also have more of a premium level up in here. So really within the counter trend, let's look at the counter trend here, right? High, low, failed, lower low. Okay, so this is where we broke this counter trend. So where's the last buying volume within this counter trend? Well, really it's right in here, right? But to be more precise, you could classify this level of supply as that last buying volume. So we could have one entry here and then one entry here. Half risk and half risk. And we can see we only came up into the first entry. Now, what's important about this is that we're creating a counter trend. Have we broken structure here? No. So I would fully expect price to make another higher high, counter trend to come up into that secondary level. So there would be no area in here to be looking for shorts. Meaning I would not have looked for like this would not be good confirmation for me to pull back and short off. It ended up doing that, yes, but that's not what is being shown, or that's not what's being taught here. What you need is a firm break of structure. So for instance, if that was our last area of demand, we came up, we had the reaction from the level, and then we repriced and we actually made a clear lower low, then yes, that would be a great area for supply to take short. But we never really broke structure, and there really isn't, even if we did break structure, there's really nothing in here to tell me that we're going short. It's just low resistance liquidity, just chop, right? Just trickle. So we ended up failing to make a higher high and we made a lower low. So where is that overall buying volume between here and here? But to be more precise, this is the last buying volume in here. So if we get a pullback, this is what I'm looking to take. And where are our take profits? Down in here. What if we get a break? Then we still look to trade it potentially upon an overall pullback, and we'll just reevaluate if that's the case. So long story short, guys, that's what I'm looking to do here. 9148 or 9150 psychological level, this previous swing point. All right, we just want to continue to trade with the trend until it breaks. Low, high, low, high, low, high, low, high, low, high. We're in from here. We're in from here. We're in from here. And now we're looking to get in from here. Fine. I don't care. If it breaks, it doesn't matter. I'm break even on this. I've taken partials. I am definitely break even on both of these, and I've taken a lot of partials off the table. I've made a lot of money on AED CAD. If I lose this trade on a measly little 0.5% or 1%, whichever one you guys decide to take it on, then it doesn't matter because all of your other positions are in profit, and we can't expect the trend to continue forever, right? Because what is a lower time frame trend? It's a higher time frame expansion. So what is a higher time frame expansion and pullback? It's a break of structure, lower time frame like this. That's what you don't know when that's going to occur. So continue to trade with the trend with confluences until structure breaks. And if it does break, go to the higher time frame, reevaluate to see, are we overall bullish or are we overall bearish? If we're overall bullish, when we break structure to the upside counter trend, then we can be looking to pull back to go long and target higher time frame supply levels. If we're overall bearish, where could price come into to have that overall pullback before continuing with the higher time frame trend? That's what we need to start asking ourselves. So this is all going to be talked about. If you already have the crash course, those of you who are currently in our all-inclusive mentorship, this is exactly what we talk about. This is exactly what we teach you to do and how we break it down step by step. But like Aiden said, if you are interested in learning about that, we do require an intermediate to advanced level understanding. So if you don't already have that, please do not go and purchase it because it's not going to help you the best way, right? We want you to be more well-versed in the strategy first before going and taking it to the next level. But if you feel you're already there, then feel free to, and we'd be more than happy to talk to you about that. All right, so I'm not going to go, I'll go over the pairs, but I'm not going to go over nearly as in-depth as what I did in AED CAD. NZD CAD, same sort of deal, right? We're higher time frame bearish, right? We can just see clearly, just like AED CAD, we swept the previous high, and then we made a low. We failed to generate a higher high, and we made a lower low. So now that tells me, again, we're in this overall pullback phase. So we should be looking for shorts. Even if we are bullish, let's just say we are. Let's just say this is going to go like this. Right? I'm just making this up, but let's just say that's going to happen. This is not in discounted price. From this low to this high, we are not in discount yet. So when we failed to generate a higher high here, because we were fully expecting a higher high, right? Because if we're in a bullish market, higher high, higher low, higher high. That's what you'd naturally expect, but we didn't. We failed to make that higher high. We made a lower low. So now we can be confident in that we're in this overall pullback phase. So even if we are, price should probably come into discounted price first, somewhere down in there. I don't know. So until we reach at least, this sort of level, we're still bearish. So we can be confident in ourselves short term as well. So scaling in here, we have a few levels. So this is lower low, a lower high, a lower low. So if we have an overall pullback, that's okay, because this is our last buying volume in here. We have that 8564 level, and then that lower time frame supply right in there at 8608 or 86000 psychological level. So if we get an overall pullback there, half risk there, that's good. But we can still be looking to continue with the trend if price just continues to go like this, just like the NZD cat or AUD cat example, right? So in this case, 1, 2, 3 touches, retail is probably shorting here, but nope, their stops were taken. They were enticed to buy it above the breakout of this trend line, and then now we're rallying lower. So that's what it is. It's trading within the current direction of trend, not being enticed by these moves like this and looking to buy counter trend when you're just probably following along with retail. Liquidity is run. We come up into a level of supply. I'm not looking to short here because I think that this could potentially be a short-term break of structure for pullbacks into our higher time frame levels. But the fact that we stopped and now we're starting to trend down again, I can be confident in looking to sell within this trend, at least to make a lower low down, right? So where is that? Well, we have an original, we had 2 potential entries. We can see liquidity was run here, buy to sell. That occurred at 8 a.m. Eastern time on Friday the 3rd. So last Friday. So this was New York session open. We had that buy to sell and we made that lower low. So just pulling back into just this general area of supply, this consolidation before the lower low, that could be a good retest. Now we had that initial reaction, came up a little bit higher to start the week. And now we're finally rolling over because we're seeing some more NZD weakness come into the market. So half risk here, half risk here. So we're currently in this trade now, and we're looking to add to it. So if we scale into the 30-minute, it just happens to be the 30-minute, we can see the counter trend, well, really the overall trend, lower low, lower high, lower low. So this currently is the trading range. So we want to be looking to trade with this range, or trade with the trend here within the range. So we can see this is really the last buying volume. So this 30-minute candle occurred 9:30 a.m. yesterday morning for me. So that is the stock market open. So essentially New York session open. That's when the New York Stock Exchange opened. So had that manipulative push up, took care of lower time frame traders in here, and then rallied lower to make that lower low to finish off the day. So now we're seeing a pullback. I'm looking for shorts from that level, as we're looking for shorts on NZD CAD as well, or excuse me, AUD CAD. So the overall bias, whether that be here, whether that be up here, or whether we get an overall pullback into these 2 levels, the overall bias is still short. All right, UJ. So now with the US dollar, we are, in my opinion, extremely bullish, right? We were bearish, but now we have broken structure and there really are no signs of bearish pressure. So I don't want to fight that pressure whatsoever. I want to continue to trade with the current trend. So with USD JPY, we were originally looking for shorts from our level of supply here. And now price has sort of overtaken that and it's going higher. We're the 4-hour 50 EMA is acting as dynamic support in this instance. So we can be confident in just at least continuing with the overall direction of the market until it breaks, if it does, right? If it breaks, then fine, we reevaluate and we go from there. That's all we can do. We just have to adapt. We can't win every trade. That's never, ever going to be the case for anyone out there. So continuing to trade with a trend as long as we have the right setup. We can't just look at the market structure and be like, oh, well, we've made a higher high. Well, I might as well just place a buy limit upon the 628 retracement. Well, that's kind of dumb because you want to build confluence within your overall setup to begin with. So originally I wasn't looking for buys in here. I'm looking for buys now as we have broken the previous supply as I just showed you, but we came into this previous swing high. This was a great area for supply. So if price were to come into that would have been nice. But anyways, we made the higher high here. We made a higher low. And if we scale into a lower time frame, what we'll notice is that we sort of created a little makeshift head and shoulders, kind of a head and shoulders pattern, sell to buy. We enticed sellers below the neckline, went long. We reacted from that prior swing high, and then we created just a lower time frame level of demand in here, and that's exactly where we came into over to the right. So we had that reaction. This is where we started to accumulate, and then we went long. We failed to generate that lower low. We swept intra-session lows with this wick, and then we went long. Right, so this will create that failure to generate the lower low move and then the higher high. So just looking to continue with the trend. I'm liking this area of interest around 136.2, that psychological level. And when I say psychological level, I just mean round figure. These are where, you know, bulk orders could be placed because there's more liquidity surrounding these levels generally. So that's an area I'm looking to continue to trade with. GBP, JPY. Now with GJ, it's a little interesting. So with GJ, we've come up into a higher time frame level of supply here. So we are falling on GJ here. We currently are at least counter trend bullish, if we can see this without having it be blurry. At least in this sort of move, we're still counter trend bearish, right? So we want to be looking for shorts. Now, where could price come down into before going long? Now, what you could ask yourself is if price breaks structure and we've reacted from a level. Now, look at the previous low. Did the previous low come into a level of demand to the left that would prohibit this from making a lower low and instead starting this uptrend? Because how do we know this uptrend hasn't already been started? Who knows? We could just be in an overall pullback right now for continuations. Well, we're confident in that we're not, because we're at least bearish here, but the fact that we still haven't come down into, there's a lower time frame level of demand down in here where we initially swept equal lows back in September of last year. So we do have a level of interest down lower, 154, 155 level, and just continuing to trade with the market structure. We can see this high and this high were taken out by these wicks right there. So that is a liquidity run. We had the reaction from the liquidity run and we failed to generate a higher high within this counter trend up move, and we started to make a lower low. So we failed to make the higher high. Most importantly, we closed below this structure point, which we did here. So really this is the last buying volume, because you could say high, low, failed, lower low. Expansion, pullback, expansion, that's our supply level. So we had the reaction from that level. Okay, and let's scale into a lower time frame. Well, we had the reaction, but we generated equal highs, kind of, and then equal lows. We're still counter trend bullish here, though. So I'm not looking to necessarily buy it from these levels because we've had the reaction from the objective point. But what we could do is look for manipulation. If we were to have gotten this move where it's a sell to buy, then that would be really good to tell me, okay, well, we're maintaining bullish structure, right? We have come into a level of demand, that last selling volume that failed to generate the lower low within this pullback. So we've come into that level. We had the sell to buy. We generated liquidity beforehand, and we broke counter trend structure, waiting for the pullback to long. That's what I would look to do. But obviously, we haven't done that yet. So it's just kind of, waiting and seeing what happens. We actually have created this quote unquote support to where we broke and retested this support as resistance. So that tells me that retail is probably surrounding this move here, and we should be looking not necessarily for longs, but we should be expecting price to go back to the upside, right? Because breaks and retest, I mean, come on, like it's all retail baloney, right? We want to be looking to trade not alongside the masses, right? Observe the masses, do the opposite. So sitting on my hands right now. If we end up getting a break of structure, we make a lower low in the market, then oh well, we'll look for shorting opportunities later on. But at this current time, because of the fact that we've created equal highs here and the fact that we created equal lows and we broke and retested those lows, then it just seems to me stops are above this high and above these highs here. So I'm looking for more of a liquidity run first. So we'll just have to see. My bias is still higher time frame bearish, but lower time frame bullish at the moment. So if we get like a sell to buy, then I could be looking for a potential hedge. And this is why I could be hedging, because the counter trend would still be valid. It would still be bullish, right? And we would have taken care of liquidity, sell to buy, but we've come up into a higher time frame level. So what this could just be is what we talk about in our Smart Money Supply and Demand crash course, a type 2 manipulation. All right, type 1 is simply just building liquidity like we did here, sell to buy, pull back, continuation. Type 2 is if we sell to buy to sell, right? We entice sellers Run up, take their stops. Entice buyers, run down, take their stops. Shaken on either side of the market. Now we can continue with the overall direction of trend. So that would be potentially an imbalance fill within here. So we could be looking to potentially short, but also if we get the pullback, potentially long it. So we're hedging ourselves just in case the counter trend continues, or this type 2 manipulation comes into the market, and then we would, look to sell it within this imbalance because we've had already reacted from the higher time frame level. And if that's the case, you win one of them, you lose one of them, you should be in aggregate profit because of your risk to reward. Now, if that does occur, if we go like this and like this, that would be beautiful for pullbacks to short. And then we would just look to add to our existing shorts that we have. All right, so that's how we can go about trading it. Nothing is ever going to be 100%. You're not going to win 100% of your trades. Sometimes it is okay to hedge, and that is one of the course videos within that course that we created, all about hedging and how to do it properly. So that's GJ. NZD Swiss franc, sort of similar to NZD CAD. We have our higher time frame bearish momentum. Just like all the other pairs on like AD CAD, NZD CAD, we've swept higher time frame liquidity and we went lower. We're still counter trend bullish. We're making higher highs and higher lows. We failed to generate a higher high and made the lower low. So you could classify that as a low, a high, a low, looking for a high and a lower low. If we are to go long, right, because we're looking for shorts, where could we possibly go long from? Not saying we're going to go long. I'm just saying, how can we mitigate as much risk as possible to say, okay, well, if price is going to go against us somehow, where would it do it? Well, this is really the last selling volume, or really just right in here is the last selling volume that failed to generate this lower low within this overall downtrend. So we've expanded. How do we know this is not going to be a pullback for an expansion? We don't, right? It could happen, but until we reach this level here, and the fact that we're counter trend bearish, we're still bearish until we at least hit that level. So I'm confident in looking for shorts until that level is met. So we talked about these two levels for quite some time. Right? This is our last buying volume in here. Right? We mitigated that level and then broke structure. This is our counter trend. High, low, high, low, high. Where do we break this low? This low right here. Where was our last buying volume when we did that? Right in here. So we have this last buying volume, but if you scale into a lower time frame, which for the sake of time I'm not going to do, that's a lower time frame supply. So we had two levels, 1 and 2. We only came into the first one. That's okay. But in the process, what do? We sweep liquidity, generate liquidity. 1, 2, 3 touches. People who are selling with this trend line, go screw yourselves, because at the end of the day, you're only going to blow your account. Sorry for my foul language. I just can't stand when retail trades off of these bull crap trend lines. It just makes me mad. Anyways, so we go short from that level. We're looking for overall pullbacks into levels of supply, right? So we can be confident in that this is a valid buy to sell manipulative institutional move for continuations lower. Now, when I say obvious break of structure, have we had that yet? No, we haven't, but we had a clear buy to sell. So I would like for further downside and then maybe more liquidity to be run up into these levels. So this supply level, that last buying volume, maybe that one right there. For shorts. Now, why this one right here? Well, obviously, yes, it is a little tiny level of supply, but most importantly, if you scale in, what you'll notice is that really if you just extend this trend line up, because maybe retail did, and trend lines aren't perfect, right? They're kind of subjective. So maybe that was the trend line they drew, and then they started to sell off from that level, right? But then the price went long, buy to sell. We had the reaction from this level here as more of a break and retest, because when traders break out, they break and retest to go long. So that would turn into that supply, because then this demand failed to make a higher high and we rolled over to make a lower low. Everything happens on every time frame. The markets are very fractal. So those two levels are valid. This last buying volume and this last buying volume, because yeah, technically we did make a lower low. So I would like to see liquidity being built. Oops. I like to see liquidity being built before, we go long into these levels, half a risk and half a risk, and then take profits. First take profit would be that level here. Second take profit would be our overall demand level at 5.3. So we're currently in this particular trade for potential 1 to 10. And then I would probably say, because of the fact that we already had our overall pullback into our level and we swept liquidity, if we were going to come up into here, we would have done it. In this case, we didn't, and we rallied lower and made the lower low. This is probably going to be invalid now. So I'm actually going to get rid of this. This is now invalid for me, and we'll just continue to trade with this current trend. That's NZD Swiss franc. USD Swiss franc. Well, we're continuing to rally higher. We've had our huge accumulation. Higher high, higher low, higher high, higher low. In the process, we've swept all this liquidity, these equal lows, sell to buy, higher high. So now, this previous supply level was invalidated because we never made a lower low from it. You can see that's a little mini level of supply. We had the reaction from it, but failed to make the lower low, obviously, because we're bullish. Right? When we broke the structure here, we had our buy level in here, which we're still in, by the way. That's our original buy. But we failed to make the lower low higher high, obviously, right? So that could be a good point of reference for us to see, okay, where could price potentially reverse, right? And that's exactly what happened. We stopped there and we rallied. So what you could do with these points of reference to say, okay, look, I'm not sure exactly where the market's going to stop, but I have a good idea of where it could, not necessarily placing a buy limit from there, but if you start to see accumulation in this level and then a break of structure on a lower time frame, having had the reaction from that reference point, you could look to pull back and buy it and have a very good risk to reward. But in this case, there was no opportunity for a pullback. So if we just scale into a 15-minute level, we can just see sort of some small repricing events there before the huge imbalance move. So I'm looking for buys from this level here. So 9,360. Yeah, we'll call it 9,360 or 9,359, just to continue with the overall trend of the market. NZD USD, I'll let him go over. GBP CAD looks really good. I'm not going to have time to go over everything, guys. I want to give Aiden some time to go over some stuff. So let me just quickly. Euro CAD, same sort of deal. Higher high, higher low, higher high, higher low. Sweeping liquidity here, here, and here, coming into a level of demand. Last sell to buy. We had another repricing event there. That demand. So we have two levels, boom and boom. So looking for longs from those levels to continue with the trend because we're currently already in buys from down in here. So Euro NZD. I'll go over GBP CAD in more detail. I just want to quickly go through the rest. Euro NZD, very bullish. We're still in this trade from 1.69. We called these two levels out here, these last selling volume in here that failed to generate lower low within this counter trend move. So higher high, higher low, higher high. These are our two demand levels. We came into those levels, boom, higher high. So we've come above this previous swing high. Stops moved to break even. Partials have been taken. So re-entries on this. I have just the overall last selling volume is right here, looking for that supply, but I also have a lower time frame opportunity potentially in here. So what we have is, the overall pullback expansion, right? So that's the higher time frame move. We have accumulation. This is supply. That's supply. This is supply. We failed to make a lower low. We made the higher high. We broke structure. We pulled back into that sort of demand level that now flipped from supply to demand. And we can see lower time frame. We created equal lows here. So sell to buy. And in the process of doing so, we created more liquidity. So equal lows here, sell to buy potentially coming into our mitigation level, that imbalance. So sweep liquidity, mitigate a level, continue. Same thing here. Sweep liquidity, mitigate a level, continue. That's how the markets run. So we are looking for buys from this. It's just not ready yet. So I'll update the VIP group if we have any ideas later on in the day. Euro AUD, I don't really see much on. We finally hit our overall take profit from our level that we discussed a couple of weeks ago. Actually, no, this was last week. Sorry, early last week, and we ran for a 1 to 11.5. CAD JPY. This one's just floating in a little drawdown right now. It's unfortunate. I still think we can run higher just because we still are bullish on what's going on here. I'm not going to take time to go over this because it would take too much time. If we lose this trade, VIP, oh well, it is what it is. We do lose trades too. We're human. But I still do expect overall longs, just maybe not from these levels. We may have that overall pullback into our higher time frame sponsored move from 98, which would be more highly probable anyways. But let me go over GBP CAD and then we'll hand it off to Aiden. So with GCAD, very quickly, higher time frame, we are bearish, right? The same sort of deal with NCAD and ACAD. Correlation, right? We're looking to sell off CAD strength. We made a low, but we weren't expecting to make a lower high, right? Because we're bullish. We wanted a higher high, but we never got it, right? We came into our last buying volume and we ended up stopping. You don't look to sell in an uptrend. You don't look to sell at supply in an uptrend, and you don't look to buy at demand in a downtrend. Because what do you naturally expect in an uptrend? A higher high. And in a downtrend, a lower low. So in this case, we stopped and made a lower low. So now we can be confident in pullbacks to continue with the trend, at least until that higher time frame overall pullback is complete. One drive, two drive, we'd like to see that third drive. And that third drive hopefully would be at 1.58, would just be our overall sort of, last point of area of demand before, more expansion occurred. So something like that. It's like psychological level. So anyways, let's look at where the structure was broken counter trend. We have a high, a low, high, a low. We failed to make a higher high, lower low. So between this low and this high is that supply level. So we have an intermediate level of supply right in here because this is within this range. So this is really our last selling volume or buying volume. And then even lower on the lower time frame, we have like a 15-minute repricing event that happened there. And that's why we had the reaction. I didn't sell it from that level. You could have anywhere in here, but I waited for the reaction. We have equal lows. So let's look at the counter trend here. High, low, high, sort of relatively equal lows in there. So we actually did sell it at two levels of supply, one in here and then one at this overall last buying volume. High, low, high, low, high, low, failed, lower, low. So we had that reaction. From here, we're in profit on both of these trades. And look what we can see lower time frame. We're starting to distribute very discrete higher highs, higher lows. We scale into the 15-minute. What we'll notice is that this counter trend, high, low, high, low, high, low, high. Mind you, we're already in these trades from here and here, right? So having understanding of the higher time frame from these levels, from the higher time frame from these levels, we can generate our overall bias. We can understand where the market's going, higher and lower time frame. And if a higher and lower time frame is in alignment with each other, then we should be very confident in our trading decisions. So we finally stopped. We rallied lower. High, low, high, low, high, low. Failed to make that higher high, lower low. So that will turn from demand to supply. That will flip from demand to supply. So now what I would like to see is either, it could do it right now if it wants to pull back up into that level for shorts, or just generate liquidity to buy to sell into our level, sweep liquidity and continue lower. That would be more probable. I would like to see that as well. I like to see liquidity being generated before mitigations or continuations occur. So that's what I'm looking for there. All right, guys. So that's what I have for my pairs. Sorry, I went long. I didn't expect that to. Just wanted to make sure you guys had had everything that I wanted to go over. And now I'll pass it over to Aiden. He can go over what he wants to.
All right, cool. Yeah, I'll just quickly touch on the majors. We have about 7 minutes left, so I'll just quickly run through it, and then we can take some last-minute questions. Okay. All right, let's see. All right, let me know if you got me, Nate.
Yeah, you're all good.
All right, sweet. Yeah, so Nate already talked about obviously USD Swiss franc, and the dollar was kind of in this weird phase for the last few weeks, right? In terms of kind of determining what the bias, what the direction is going to be for kind of the short to near medium term with the dollar pairs, right? And I think yesterday we're starting to see some more clarity on direction, right? And kind of shifting back to that firm dollar bull bias, right? Especially here with, on USD Swiss franc, as price has clearly accumulated, right? We've accumulated and we've broken to the upside. We're now printing higher highs and higher lows. And so, the previous high here was a level that, I gave out last week, right? To scale in off of this, obviously the lower time frame in here that Nate mentioned as well. But we ran the sell side liquidity, had that sell to buy, and so now it's just a matter of looking to buy intraday pullbacks, right? And in terms of higher time frame targets, before I get into the current area of interest, I think this one can absolutely run previous equal highs on the higher time frames, right? Up here we have perfectly engineered equal highs at 1.0150. Right. And so we could very easily have a very significant swing opportunity to the upside here on Swissy. I really don't see anything here that's going to stop this necessarily. All right. And so potentially hundreds of pips to catch. Obviously, this is going to be our first area of supply where you should be looking to take partial profits as it is a potential reversal area. However, we have the equal highs here, which I firmly believe will be the draw on liquidity. Especially as we're seeing dollar bull momentum. So for the here and now, hop down to the lower time frames. 15-minute time frame, Swissy. Sorry guys, I'm not at my usual setup, so I don't know what's going on. 15-minute time frame, right? We simply want to now see intraday pullbacks, right, into relative discount for continuations. And the most obvious area for me is going to be this area of inefficiency, right? We had the massive high volume candlestick enter into the market from yesterday, right? So I think it's a matter of just retracing into that. You have the little down close candle here as well. So really getting down into 9,380 into 9,360, I think will suffice for a point of interest for continuations higher, right? So that's just following that dollar strength narrative, and it's really the same across the board. I mean, if we go over to Kiwi dollar, higher time frame, I really don't see anything stopping this one either. Right now that we've kind of breached through, I don't see anything in here stopping it until we dig deeper down into 5,900. Right, so I think we very, very well could melt for a few hundred pips down into 5,900. So where's the potential entry? Oh, we have a very nice inefficiency from that was created yesterday with this high volume, right? Kind of inverse of USD Swiss franc. Right, we have the high volume candlestick to the downside, institutional play. And so it's a matter of just retracing back up into that. And what I have mapped off is our inefficiency here. Right, so we have that 30-minute, you can see, and between wick and wick, between these wicks. Also, you have the up close here, that which we very well could get up into at 6,180. Right, so anywhere from 6,180, 6,160, that's where I'll be looking for retracements for continuations lower down into our higher time frame objective of at least 5,900. And the same applies, obviously, AUD USD is very nicely correlated with NZD USD as well. So on this one, I'm looking to dig down into 6,440 as the higher time frame objective. Now, I'll reiterate, guys, when we tell you the higher time frame objective, doesn't mean at 6,440 I'm looking to buy it. Doesn't mean I'm placing a buy limit here. Right? It's just an overall objective, an area where I have confidence that price with momentum is going to trade into, and so I have confidence to look to sell the retracements. All right, so 6,440 is going to be my target on AUD USD. I guess I'll hop back out just to show you guys before I get into the lower time frames. All right, it's really digging back down into here, right? The down close before we saw that massive engulfing candlestick. I do think we can at least get back down into here with this dollar strength. All right. So 6,440 is the objective. And very similarly, right, we have the inefficiency from yesterday, wick to wick, right? Getting back up into that. Now, I know it's not, necessarily premium price, which we would like to see, but oftentimes, you have to be realistic with what's going on, right? With this strong momentum, realistically, are we going to immediately retrace up into premium? Right? And the answer to that, more often than not, is no. Right? So, especially as we're not seeing some sort of railroad, right? We're just kind of just trickling back up. I don't see us really necessarily retracing very far. Right? So we have the inefficiency from yesterday, right? 6,120 into 6,450. I think we can get back up into here and then have that continuation lower. Just continue to trade with a lower time frame trend. All right, now if we do retrace higher, then I think this will be the next area of interest around 6,700, round number. Okay. And finally, very quickly, just, GBP USD, Euro USD, both very similar to what we've already discussed on AU, NU, USD, Swiss franc. GBP USD has now breached demand, right? We've traded into it, reaction, didn't make a new higher high. Traded into it, reaction, didn't make a new higher high. Traded into it, reaction, didn't make a new higher high. In fact, we respected the supply here where we sold it as a hedge. All right. And so now that we've breached the overall low, right, obviously, there's nothing kind of clear here that sticks out to me in terms of a specific POI, but we do have, if you think about it, buy orders, we breach through, we need to mitigate out of them. Now, I will be cautious in that how many retail traders are looking at this as a break and retest, right? So don't just immediately look to sell right off the touch upon this quote unquote support turned resistance, right? I think if it's going to play out, we'll likely see some sort of reaction and then some sort of significant manipulation before we, respect that general area and actually continue lower, right? So just be patient as price trades back up into this strong area. We need to weed out the retail traders first and get them out of the equation. In terms of downside objective, right now that we've breached this low, which technically, guys, wasn't even market structure, as this higher low did not produce a higher high, right? We did not close above the previous high here, right? So technically, our trading range is still here, right? This is our trading range that we're still working with. And so, in terms of an objective POI, I really do think now that we've taken out this low that there shouldn't be much stopping price until it gets down into 1.16. Right, so 1.16 can be the overall objective. We can look to sell into that objective. Okay, and the last one for today, Euro USD, right, and these are all falling in alignment. Now I know we haven't taken out this low here, which this low did produce a higher high, but just based upon what's happening across the board on the other majors, I'm well, first and foremost, I'm really not seeing anything indicative of a shift back to the upside, right? I'm not convinced of any type of long opportunity on Euro USD, right? Especially if we're cross-referencing these pairs, right? And so that leads us to, okay, well, where are we likely to go, right? And in my opinion, I think first and foremost, we can look to target old lows. But next in line in terms of an objective, I think we can get back down into 1.01 as an objective, right? A significant level that was broken through, but never accounted for, never mitigated. All right. And so we can look for pullbacks to sell Euro USD, in my opinion, especially after taking out our previous low here, right? That's going to be the added confirmation, right? But just based upon current price action, I would still be comfortable looking to sell pullbacks. So we do have the inefficiency, right? Wick to wick. We also have the kind of tiny demand to supply flip, the more premium preferred level in and around 1.0650. If we can get up into that, that would be ideal. But again, we have to be realistic. So if we just tap into this inefficiency in and around 1.0620, I think that will suffice as well for continuations to the downside. All right, so that wraps it up for the dollar. I think it's, finally we're starting to have some more clarity in terms of where we're heading for the near term for this next quarter, and hopefully we'll be able to piggyback off of some of this momentum. All right, should be good to take a few questions, guys. I know we're running a little bit over time, so aren't able to answer your question today, just feel free to shoot us a message on Telegram at Ariel Fx Trading, and Nate can drop.
And to kind of reiterate what we were talking about earlier, right before we got started here, if you guys joined late, for those of you who know and who got on last Saturday's webinar, we did talk about our new prop firm automation service that we have come out with, in which we are helping you pass your prop firm challenge or your money back, even including the challenge fee. So essentially, if you do not get funded, you do not pay a penny. So that's sort of different than a lot of other services out there who kind of do something similar. They just refund the service fee. We are doing both because we want you guys to feel at peace and have that peace of mind, knowing that, you will get funded with us if, or your full money back, right? We don't want you guys to think that, that we're just trying to, play games or whatever. That's not our whole goal. Our goal is to give you guys that peace of mind, knowing that, you will get funded with us or your full money back. So it is an investment. However, in terms of the ROI behind it, it is quite substantial, right? Because once you get funded, we're going to provide you signals essentially for your funded account, and you can make money with that as well. So if that's something you're interested in and want to hear more about, we are holding another webinar this Saturday at 3 p.m. Eastern time. I will be sending out a link today So make sure you are a part of our Discord channel. I posted that above. So if you scroll up in the chat, you'll be able to see that. And I also posted the link to join our Telegram group. I'll also be posting it on our IG story. So make sure you follow us at Ariel__FX, the double underscore, if you don't already. So we are, definitely wanting to help you guys, because we know challenges can be tough for you. And, especially even if you do pass them, funded accounts are very difficult to maintain as well, just because, statistics will show, even though people have a 90 to 95% fail rate when it comes to challenges, those who even do pass, 90% of those people don't even make it to their first payout. It's just because they're very undisciplined and they don't really know what to do. So we're going to help you follow the rules down to a T and help you grow and scale that account. Obviously, nothing is guaranteed after you get to that funded account status, but we are providing solutions as well. And we will be coming out with some more EAs, some more expert advisors, so algorithms that will be specific for the funded account part of this prop firm. So a lot is coming out. We are very excited about it. We're in the process of getting phase 1 passed for a lot of people right now, since we just started a few days ago. So as always, guys, if you are interested in learning how to manual trade, just like we, discussed today, and break down the charts just like us, and you want to learn more about how our program works and everything, obviously we do not just have everything up on our website for you to go and purchase. We require calls first, because we don't want you guys to spend money on something that may not be the right fit for you. If at the end of the day it's not the right fit, well, we'll give you our advice going forward and help you the best way possible. But if it is the right fit and you feel as if you want to move forward with it, we would love to have you on board. But we just want to speak with you first, just kind of go over your goals, how we can best assist you, because everyone's different in terms of their experience and their learning style and everything. So head over to our website and book a free call with us. It's www.arielfxtrading.com. We would love to speak with you just for 10, 15 minutes of your time. I'm just going to talk about how we can best help you. If it's the right fit, great. If not, then no worries. At least you will have known that before. So how do you maintain good risk to reward ratios? It really just comes down to being patient with your setups. It comes down to having confluence within your trading. I'm not really a scalper myself, so I'm not really aiming for 1-to-1s or 1-to-2s. I'm more of the intraday, intra-week, so I naturally have good risk to rewards as a result of my higher time frame trading. So, 1-to-3s are really the bare minimum. I want to have at least a minimum of a 1-to-5 usually, but 1-to-3s are that absolute, lowest of the low for me. And it's really good, guys, if you can be patient with your trades, right? If you can be, trading intraday, intra-week levels. I'm not saying you guys have to position trade and hold for weeks or months at a time. We don't do that. That's not our, sort of personality within trading. However, we can be holding for, a few hours to a few days to potentially a week at most, just depending on how big the trade is. But it's really good for your psychology too, because if you're the type to want to trade just the sessions and want to scalp everything, well, first and foremost, guys, there is not always going to be a setup in every single day. So if you're sitting down at your chart in London, New York, or Asian session, you're trying to find a setup because, you want to be involved in the market every single day, your brain is going to, you're going to naturally see something in the market and be enticed to place a trade, whether it be a simple volatile move that you could look to pull back and sell or buy from. That's usually oftentimes false in the first place. You have to have that holistic understanding first, right? The higher time frame analysis. So lower time frame trading can definitely be beneficial because of high risk to reward for sure, but it could also be very detrimental because you could lose more trades than you win. Even though if you have good risk to rewards, you would be overall profitable, but obviously the mindset of a normal trader you don't have that, right? So if you're losing more trades than you win, you're going to be more apt to over leverage and over trade. So that's why I personally don't scalp. It's not my personality. I don't like it. It's not good for my psychology. I'm very comfortable with hitting 1-to-3s, 1-to-4s, 1-to-5s, than trying to hit 1-to-20s, but losing 6 or 7 trades in a row before I do so. So it's just all about your personality. I will say that lower time frame trading requires more precision because it requires the higher the time frame analysis to do. So, it's all about what you want, what you're comfortable with. But, I would highly recommend, looking at it from a more holistic perspective, taking, maybe half risk positions just at the general overall levels, and then maybe waiting for scaled in confirmation based trades to add the remainder of your risk. because at least if you do that and price reacts from the level and then just shoots in the correct direction without confirmation, well, then at least you're in the trade and you're not having to worry about FOMO or chasing the trade. But if it just blitzes right through it, well, then you only lose half risk. But if you actually do get confirmation, then you can add the rest of your risk on it, higher risk to reward, and then have both open at the same time. To where even if that lower time frame trade that you would have just placed on its own, even if that loses, you still have that overall level in case price hits your stop on the lower time frame trade but ends up continuing the right direction of the overall trend of the market. You're still in that higher time frame level, which aggregate position would probably be most likely in profit. So it's just a way you view the markets and how you go about trading your trading plan as well. And this is everything that we're going to be providing to you as well within our mentorship. So you're going to be able to go from step by step how to go from a blank chart to a potential setup. That is our overall goal with you, helping you get funded yourself, but in the meantime, getting funded through our prop firm service to get you funded instantly, guaranteed, or your money back. So we have a lot of options, guys. Obviously, we're not going to pressure you into anything. It's just based upon what you want and what you think you need. If you don't think you need anything, then and you like these live sessions, we'll keep hopping on and continue to be a student of the game. We love to see you guys here. But if you feel you want to get that extra boost, then reach out to us. We would love to just sit down with you and talk to you about what you think you need first before we get you involved in anything. Because at the end of the day, we don't want you to get involved in something that you don't need or don't really truly want, right? It's all based upon what you need. And that's why you guys are getting on these live sessions in the first place. So let's see. Last couple questions, then we'll hop off for the day. I don't know where to place stop loss when it comes to placing stop loss at a balance level and when it's not in premium or discount areas like NU and AU. Okay. Trades in the market. So, all right, I'll go over this question. That'll be the last thing we talk about today. So if you guys are good to go, thank you guys so much for hopping on. We look forward to seeing you this Saturday on our webinar at 3 p.m. Eastern. I have to unfortunately cancel our typical live session that we hold at 10 a.m. Saturday, just because I have something going on in the morning. But we will be holding all the other future live sessions every Wednesday, 8 a.m. Eastern, and then Saturday, 10 a.m. Eastern, as we've been doing. But
I'll be doing the Smart Money Sundays, guys, on our YouTube channel. So make sure you subscribe to our channel. It's just Ariel Fx. And that'll be posted on Sunday afternoon before market open, kind of breaking down what we expect to happen next week. So check it out.
Yep. So in terms of stop loss, guys, we have to just kind of understand, what high created what low. So obviously this overall swing high created this overall swing low. So just from a general higher time frame standpoint, you would be most likely very, very secure by placing stop loss above this high. However, what kind of risk to reward is that, right? And we're all about risk to reward. So we really wouldn't be placing a stop above that high if we're looking to enter into these like two levels. So what I would look at personally is I would look at, first and foremost, if you have these two levels, you can either place entry 1 here, stop loss here, entry 2 here, stop loss above the previous swing high. It's really just where, in this case, liquidity was run or where demand flipped to supply. Well, that's really the only two questions you need to ask yourself. So we have a high, a low, a high, a low, a high, a low. That's our last selling volume. We reacted from it. Could have made a higher high, but didn't. We stopped and made a lower low because we're overall bearish. Because, like we said, we're continuing to push lower. We swept liquidity, buy to sell. So your most conservative stop loss would be above that high. It really would be, because that's the overall swing high that created the overall swing low. Because technically, could we go like this? Yeah, we could. We could, create liquidity in here, maybe sweep it, still maintain the bearish structure. That's what could happen. And if that's going to be the case, guys, then we'll look at other opportunities in here after that happens. After the counter trend here breaks, we have a buy to sell. We look to continue with this trend. We look for other opportunities. There's nothing we can do. But in this case, I wouldn't be placing stop above that high just because the risk to reward on that is very small. So I would just look to go with what I know. Obviously that's the demand that flipped to supply. So this is the overall last buying volume. We came into this little area of supply as well. So we can be confident really in stops above this high. I wouldn't put stops above this high because on a lower time frame, this is the high that generated that low. So that's the range here on the lower time frame. So no matter where you put entry in here, stops have to go above that level. So entry 1 can be here, stop 1 can be here, entry 2 could be here, stop 2 could be here, or you could do it a little differently. And let's just say, for instance, that and I'm just going to make this up, guys. Let's just say this pullback was like that, right? And we went short. Entry 1 is here. Let's just say entry 2 is like right in here, right? Let's just say it's right there. So these two black lines, I'm making this up, guys, but just bear with me. You'll understand. So let's just say that that's the case. And if you want to place entry 1 here, but you don't want to place stop loss up there because it may not be a big risk to reward, place your entry there and your stop loss at your secondary entry. Just so in case you do end up being triggered out of your first, or being triggered into your second position, you'd be triggered out of your first, but then into your second with a better risk to reward, right? So it just depends on what kind of risk to reward you get, whether you want to put both stops above the overall swing high. And in this case, for this particular trade, yeah, you would place both of them above that high. But if the swing high was up here, then between this entry and that high is pretty big. So the kind of risk to reward that you'd get probably wouldn't be that big. So in that case, I would place entry 1 there, stop loss at the secondary position, wherever that may be. Because if it hits your first entry and goes, well, at least you're in the trade. But if it comes up to your second, well, yeah, you get stopped out on half risk, but then you roll over with a better risk to reward and aggregate positions are in profit. So it just comes down to practice. There's no, specific like general rule of thumb with it. Really, you just want to be placing your stops above the sponsored move or above the previous swing high or low. That's really it. Because like I said, the markets are going to be different every time, right? Nothing is going to be the same. So there's nothing that I can say to give you the exact position to place your stop every single time, because every setup is going to look different. So it just comes down to practice. But if you understand kind of what I went over, that may help you a little bit. All righty. All right, guys. Well, thank you guys so much. We are out of time. We will talk to you all this Saturday. If you are interested in that prop firm automation service, we're going to be talking more about that Saturday, 3 p.m. Eastern. I'll be sending the link out on our social medias, so stay tuned for that. But anyways, have a good rest of your day, and we'll talk to you all later.
Thanks, everyone. Cheers.